Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Went Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Bakil. Here are the headlines. Markets are off to opening highs, and the Nifty trades around 11,600. The IT index is the top sectoral gainer. Open interest has surged in stocks like L&T Finance and Yes Bank. Both stocks are seeing fresh longs. Infosys is the top gainer on the Nifty after its first quarter earnings, with the management hiking its full-year margins guidance. Pardon me, that is revenue guidance. That's a correction there. And Sun Pharma is also leading gains on the index after Morgan Stanley upgraded the stock to overweight.
Okay, those are the top headlines for you at this hour, and had it not been for Infosys trading in the positive territory, we would have seen some cuts coming in for Nifty this Monday morning. So Nifty could be trading with gains, about marginal gains, 11,566, which is above its 100-day moving average, and the futures continue to trade at a discount of about 13 points. I just want to pull up the contributors list. I think that's going to give you a better picture of what's happening, what's supporting the index to be trading in the positive territory. Infosys, which came out with its numbers, increasing the revenue guidance, that's one of the top gainers on Nifty as well. 35 points contribution, mind you, coming in from Infosys, and market is just up about 15 points. So had it not been for Infosys, we would have seen cuts coming about. Sun Pharma, Kotak Mahindra Bank, a couple of other stocks which are trading in the positive territory, and what's capping the moves on the upside are stocks like ICICI Bank, ITC, as well as State Bank of India. Okay, that's about Nifty, which is trading above 100-day moving average. Pull up Bank Nifty as well. That's been trading below its 50 DMA. In fact, 30,500 is a very crucial mark. By the way, that's been breached now. Bank Nifty is trading below that mark, and open interest is up about 7%. Discount of about 8 to 10 points seen for the futures, indicating there could be some short positions being built up here. Quickly address the broader markets as well. The market breadth, at least when the markets open, was in favor of the advances, but sharper cuts seen for broader markets. Mid-cap index down 0.8%. Small cap also seen cuts of about 0.4%. The advanced decline ratio will tell you what's happening with the listed universe, and now you can see it is in favor of the decline. So not a great start to this Monday morning. Remember, the Asian market also opened with some bit of cuts. What levels to watch out for the week? If you look at the weekly expiry of July 18th, maximum open interest is at the 11,600 call and the 11,500 put. So definitely we're staring at a very, very narrow range of about 100 points. And for this morning, we are seeing more of addition coming in on the call side. The 11,600 call, which is sitting with maximum open interest, has already added some 5 lakh shares. And even the out of the money call strike 700 has seen addition of about 3 lakh shares, whereas on the put side, 11,500 is seeing OI addition of about 4 lakhs, and the 550-600 strike have also seen some bit of addition. So FIs continue to sell for the 9th straight day on Friday in the cash segments. On the index futures side, they remain net short on index futures, and that's the ratio there on the screen. Let's see what transpires this week, Agam.
Yes, absolutely. And of course, earnings once again will be in focus. But let's take a look at all the stocks which are seeing an increase and a decrease in open interest. Starting off with those which are actually seeing advances in OI. We have RBL Bank right at the top, along with Tata Elxsi. Both these stocks are declining in trade, with fresh shorts building, considering a 15 to 16% increase in OI there. Interglobe Aviation not doing too much when it comes to spot. However, 10% added in OI. Tata Chemicals is also under pressure, just a tad bit. And Yes Bank, of course, making a surprising up move around 3%. But trying to edge back towards the mark of 100 rupees per share. For now, that is something that we may take up with our experts too in today's Day of Trade. To talk about those stocks which are seeing unwinding in trade, that is, not too much actually, less than 1% for something like G1 Financial or Tata Motors. However, there are plenty of Tata companies which will be in focus, and of course, we're also keeping an eye on something like Infosys today, Navneet.
Okay, of course, Infi is in focus, and that features in one of the stocks that we want to take views from our experts on. Numbers were good, and the FY20 revenue guidance has been increased to 8.5 to 10%. In fact, Citi's upgraded the counter to buy from neutral, so we'll be watching out for that one. The other one is L&T Finance Holdings. Remember, the earnings come out this week for this stock. It's up for the 3rd straight day. It's been trading above its 50 DMA but below its 100 and 200-day moving average. Let's see if the gains which have been registered in today's session can continue or not. And the third one is Dewan Housing, which posted, remember, its 4th quarter earnings, posted a loss of about 2,223 crore, and the stock's down 75% so far this year. It's also the top F&O loser for the day.
Okay, well, before we get in our experts, here's a reminder. If you have any queries regarding futures and options markets, you can call us on 022454044141, or of course write to us on Twitter and Facebook with the AskBQ hashtag. And we're also streaming live on YouTube. Let's get in our experts for the day then. We have Amar Singh of Angel Broking and Amit Shah of Capital Markets joining us on the show. Good morning to both of you and thanks for taking the time out. Amit, where do we go from here? Some very confusing cues about Nifty languishing around 11,550 odd for the last 1 week. What's the way forward?
Yeah, definitely. If you consider from last 7 weeks, the Nifty was in the range where it had respected the support of 11,600 on a weekly closing basis. But the last week we have violated that support, and it's been trading at the 7 weeks low. So definitely now with this support being violated and considering the intensity of the fall, what we had seen in those 2 days of fall where Nifty reversed from 12,000 odd mark and pushed close to around 11,500. So with such of intensity of the fall in the market, it's always disturbing, and on the upside the resistance will always remain quite stiff and stubborn. So I believe till the time 11,650 on the upside is not taken off, there are multiple resistances though, but 11,650 being the immediate one. The more it sustains below that, the more selling pressure the market can witness. On the downside, it has almost cleared the filled the most part of the gap which we had seen during the exit poll outcome.
Right.
So the gap entirely will be filled by around 11,425 odd. So that will act as a key support. In my sense, the more it sustains below 11,650, we are poised for 11,400 to 11,300 levels on the lower side. As we have seen, the put writers also have showed lack of conviction around 11,500 and has been pushed over to 11,300. So I believe there would be too much of action to be seen. Volatility can be played, but it was more of a sell on rise on the market for the July series.
Okay, and I mean, how do you have any strategy on the index? Either the futures or option side?
Considering we are seeing some kind of a time traction at this point of time where it is hovering around 11,600 odd band, I would play a weekly strategy on this where a protective call would be more advisable at this point of time, where I would be comfortable shorting Nifty at the current level and to just hedge a bit part of it on the upside in case of there is some pullback towards the resistance mark of 11,650 odd. I would be buying 11,600 this week call option, which is hovering around 40 odd rupees. For this, the stop loss will remain at 11,650, and on the downside, I anticipate levels close to around 11,450 to 11,400 levels.
Okay, well, Amit has already partially explained what a protective call is, but for those who are very new, this when you do have or you are holding a negative view on certain securities. In this case, of course, the Nifty futures where Amit is selling them, and he in order to hedge against that short position, he's also buying a call, and this time that particular call is around 11,600. Of course, this will help you make the most of just in case if there are any sharp up moves, and that call can come into play and you can take advantage of that. That said, Amar, good morning to you too. How are you placed on the markets? Are you also negative? What's your view here?
I would say technically looking at Nifty clearly shows that the short-term charts point to selling pressure, and also the bears have an upper hand. As long as we don't see a breach below the 11,400-450 mark, I would say there would be some consolidation again on the upside. 11,650 is the range. So it's a narrow range, but I would say the upper hand remains with the bears, so higher levels will be sold into. Because looking at the daily charts clearly indicate that there would be selling pressure, and at the same time, even if we look at the weekly charts are also clearly showing that the bullish momentum earlier that has clearly died down, and also there is bearish divergence on the weekly charts as well, and there was a bearish candlestick formation on the weekly charts that clearly reflects that a short-term top definitely has been made. So these are the clear-cut indicators which show that upside for Nifty sustaining is going to be difficult, and high levels will be sold into. But in the short term, I would say 11,450, 400 to 450 on the downside. That's a very crucial zone of support. Resistance 11,650. So high levels selling is a better option, as well as buying around supports as long as this range plays.
Okay, so that's pretty much a consensus view coming in on Nifty right now from both Amar as well as Amit. In fact, if you were to go by the trend of last week, there has been a supply which is coming at higher levels, and last week's low was somewhere about 11,461. So I think that will be keenly watched out on the downside for this week as well. Last 7 days, by the way, Nifty is down about 3%. Moving on, let's get you some stock-specific ideas then. Amit, what are you betting on in terms of individual stock futures for today?
So I have one long and one short idea. I would be taking a bet on the long side for Ultratech cement. So both these cement space, Free Cement and Ultratech cement has been showing some kind of a persistence on every decline. I believe Ultratech cement, the way it has reversed from 4350, 4400 odd levels, has been able to hold some strength above the 4500 odd mark. And the more it sustains above 4590, 4600 odd levels, the more strength the counter can see. I believe on the downside, 4520, 4500 will act as a momentum support for the space. And more it sustains above 4600, we can anticipate some positive action towards 4850 levels on the higher side. I have another sell idea, which is on Bosch Limited. Now, if you look at the Bosch on a positional structure, the stock has given a violation of its monthly support over last, I believe, 3 to 4 years. So that's a disturbing sign when I look at the positional structure. On the upside, it will cap a stiff resistance around 16,500 to 16,300 odd mark. That will remain as a stiff resistance zone. Any upside towards there, those levels can be short-lived. And violating below 15,900, 15,850 odd, I believe there can be some intensity in the downside where it can move on towards the next support levels of 15,200 to 14,900 levels.
Okay. Well, two ideas from Amit. Amar, what about you? What stocks are you betting on today?
Yeah, I would say the first stock to look at is NMDC. On the buy side, we are seeing NMDC overall sustaining, and also if you look on the daily charts, the stock seems to have very strong support coming at around 110 odd levels. And technically, if you look at the intermediate term trend, that remains positive and strong. The long term trend has also reversed on the positive side. So this is one stock one can look at. So at the current levels, 111, 112 levels, one can look at buying the stock with a stop loss of 108 and a target of 119 on the upside. And the second stock to look at is Tata Chemicals. The stock has corrected and currently trading around 593 odd levels. So this is one stock one can look at, because if you look at the stock has got very strong support coming around 588 odd levels. So this is one stock one can look at buying with a stop loss below 585 and a target of 638 in the short term.
Okay, so those are some individual stock futures idea coming your way from both our experts, Amit as well as Amar. Let's move on and talk about the stocks where we want to get our views on. And of course, on top of the list today is Infosys, which came out with its numbers on Friday. And Agam, you were in Bengaluru tracking the numbers pretty closely. And the key takeaways was revising the revenue guidance on the higher side.
Sure.
Deal wins were pretty large this time around.
Yeah, absolutely. Of course, the revenue guidance hike is a positive underneath. The other thing that actually worked out in its favor was the fact that their capital allocation policy has increased. So from around 70% of the free cash flows, or cumulatively over the next 5 years, they've increased it to 85%. And I did ask the management as to where the rest of the money will go, and the management says that they just want to use and keep the rest of the money as a reserve, just in case if they do want to go ahead and acquire something. Of course, the free cash flows, the fact that it is free cash flow, that means that capital expenditure has already been accounted for. So on the whole, this augurs well. This obviously means that, well, shareholders will get a little more than what they are used to.
But did they give any breakup between dividends or buyback? Will they go for that?
No, so that is what they're saying, that it is relatively a little. It's too soon for them to decide as to what method they want to take. I've been reading a lot of reports and where they're still suggesting that a buyback option may not be completely ruled out. It does have certain advantages, but again, they're seeing things and how and that is the case for TCS as well. They did not commit to how they wanted to go ahead and return the shareholders' money. But of course, right now we're looking at a lot of strength in Infosys. The thing about Infosys, of course, is also the fact that over the last few, well, I would say sessions, it's not done as much. It's at around 770 odd. It's of course, it has advanced today around as much as 6%. There you have it. This is what I was saying. And over the last 1 month, it's just advanced by around 4%. So the real question is, have things changed, or should we see Infosys close at these levels? Will a trend have changed here? Because about just 5.5–6% increase as far as a 3-month basis is concerned. So Amar, I take this question with you. Your view here, how would you address Infosys?
This is for which stock?
Infosys.
Yeah, looking at Infosys, see, Infosys, if you look at this particular stock, overall the long-term trend, that's the monthly charts, remains positive and strong for Infosys. And also, if you look at Infosys, what we are seeing is that last week of April's high of somewhere 773. So that is an immediate level of resistance, but technically the stock has breached a crucial resistance zone of 750 odd level, 750.55. So clearly there is a positive upside to the stock. The stock now needs to sustain above 755 levels. If it sustains above 755 levels, then the first immediate level of resistance is 775. If that is taken out, then the stock is headed higher towards 800 levels.
Okay, that's the technical view on Infosys. In good show when it comes to the first quarter earnings as well, and the stock is up about closer to 6%. It's a heavy weight on the index with weightage of about closer to 5%. Let me move on to the next stock, and that's L&T Finance Holdings. It had a gap up opening, and I think it's come off from the highs that we had seen, but the open interest is higher right now, up about 9%, indicating there are some fresh bets being taken for L&T Finance Holdings. It's up for the third straight day, and also the earnings come out on the 19th of July. That'll be falling this week. Amit, if I could come to you, it's fallen off the highs that we'd seen at least for the day, but how are the charts looking like? Would you take a bet here at current levels?
See, if you look on the positional side, it is making a lower top, lower bottom formation since the time we have seen the NBFC crisis coming in. And even it attempted to make across 155 odd levels during the month of April, but since then also it was pushed back sharply, and since then it has been making a steeper lower top, lower bottom formations. Yeah. So in my sense, though the stock has seen some kind of an open interest traction since the inception of the July series, the open interest has increased close to around 6% odd, and today also we are seeing some rise of around 9%. On the downside, it has momentum support of 117 odd. That will act as a weekly to monthly kind of a level. If that manages to hold, then we can see some kind of a breather on the upside towards 130 to 132 levels. So just to violate the pattern, which is at currently lower top, lower bottom, the previous high was 137. So if it manages to take that, that will give the violation of this pattern, and then possibly we can see some structural reversal in this particular stock.
Okay, the next stock that we want to talk about is probably a really tough one to call, and I'm sure we really appreciate the fact that our experts do talk about it. It's Dewan Housing Finance, which is currently under pressure, and again, a really, I can't say it any more than the fact that, look at this one. So it's down another 15%. Its open interest has seen no change. Clearly, there are no positions being taken because there's literally, you would really wouldn't want to know as to what's happening right now. It's currently at around 55.8. The question is, what do we do? Is there any trade here, or would you absolutely avoid taking this one? Amar, let me take this one up with you. What's your view here?
We've been negative on the stock, and also technically, if you look at the charts, the long-term charts, I would say the monthly charts clearly points that the stock is in a very severe downtrend. And on the daily charts, yes, the daily charts did witness some consolidation, the stock bouncing back again, giving up all the gains. So technically, I would say the stock remains negative. I would say immediate level of support for the stock is around 54, 55 odd levels. So if that is taken out, then the stock is headed lower towards 50, 52 odd levels. Buying definitely is not recommended in this stock.
Okay, and it's a beaten down counter. Let's see how much more downside is there for Dewan Housing, which is down nearly 75 to 80% so far in this calendar year. All right, with that, we will move on to our viewer queries. And our first query comes in from Manikant. He's written to us on YouTube. He's asking, what's the view on the 95 call strike of Yes Bank ahead of its numbers? I think Yes Bank's numbers also come out this week. I think it's day after tomorrow on the 17th of July when they will be reporting their first quarter earnings. This too is a beaten down counter, down about 45% so far for this year. And the 95 call strike is quoting at 8 rupees. Amit, would you advise taking a bet here? It is up 3% in today's session, but it could be a short covering bounce as well.
Yeah, definitely. On a short-term basis, it's more of a volatile play. There are very less success stories of a falling knife showing a strengthable reversal. So this would be more of a kind of a very short-term play where it is taking some kind of a supportive action around 90 to 90 odd levels. And if it manages to sustain more above 95, there can be some room towards 102 to 104 levels on the higher side where there is another leg of resistance. So I would advise that need to be very quick enough in terms of booking your trades, booking profits, and 94 at this point of time would be my strict stop loss for the open position of this call option of 95 strike. It would be recommended the sooner you get out, it is better, because the next week it is poised for the expiry week where we can see a time value decay.
Okay, well, the next query is a little bit of an interesting one. The viewer Lalit Akhare here is actually drawing a parallel between the movement of Larsen and Toubro and the Nifty. To put things very simply, he is looking to sell, from what I understand, a strangle. So he's looking to sell the 1560 call of L&T, and he's also looking to sell the 1360 call. Now, from what I understand, he's clearly expecting some sort of consolidation because he's looking to sell both these options. But he is also suggesting that what happens when, he's actually looking at, he's considering L&T's rally to 1600 at peak when Nifty's crossed 12,000 and it is now at 1460. If the Nifty remains below 12,000 as it is assumed, what will that mean for L&T as possibility of crossing 1600? So it's a bit complicated, but to put things simply, it's literally putting L&T in terms of the Nifty in movement and wondering whether or not you can actually go ahead and sell that strangle that we've been talking about. So Amit, what's your view here?
So I think it's a good relative analysis what the viewer has done. Definitely, if you put it on a slightly 1 to 1.5 year perspective, you can see that L&T has seen some kind of outperformance vis-a-vis Nifty. Yeah. And definitely during the rally towards 12,000 odd mark, we had seen the entire capital goods space showing the strength towards a positive side. So in my sense, in the coming year, it's also I feel L&T can see some relative outperformance vis-a-vis Nifty. The strategy what is deployed, writing 1560 call and on the lower side, if I'm not wrong, 1380 or put option. Yeah. It will make sense considering the July series where the stock has a very good support around 1380 odd levels. That's where the gap up had seen previously. And on the upside, yes, 1560 can act as, or rather 1520 can act as a resistance for the July series. So it can be a good strategy for July series where we can anticipate some time-bound sideways movement. Right. But otherwise, on a positional structure, I would be maintaining on buy on dips or buyer on every rise for this particular stock.
Okay, let me take some queries from Facebook as well. Girish Kumar writes to us and he wants a view on Justile, and what he's asking is, can Justile be shorted from the current levels? It's trading at levels of about 774. Remember, in the last 2 weeks, it's given you meager returns, but still it has been giving you positive returns. From the recent high of about 812, it's now fallen to 775. Amar, at current levels, would you advise someone to short Justile futures or they should wait for more correction?
I think a Justile on the charts clearly shows that Justile continues to be extremely strong on the long term and the intermediate term trend. Short term, yes, it's witnessing some consolidation, but lower levels buying would make more sense. So 760, 765 is a good level of support. So the stock can be bought around those levels, whereas on the upside, 785, 790 can be used as booking profits.
Okay, I think we can squeeze in just one more query. I'm going to take one up. on Asian Paints, and this one is from Sangamesh. He wants to know if, well, he just wants a view on Asian Paints. It's currently not doing too much. Open interest has increased by as much as 2%. Currently at 1,366. Amit, very quickly, your view here.
So on a weekly chart, it has showed some kind of a reversal, but the confirmation is lined up above 1380. So till the time it is not crossing 1380, I would wait and watch. On the downside, it has a key support around 1345.
Yeah.
So if that gets violated, avoid. Not a completely short candidate. But if I want to play long, I will wait for 1380's confirmation. Above that, it can be traded with 1345 as a stop loss.
Right.
Okay, that's a view on Asian Paints. Let me quickly revisit the markets. Nothing has changed much from the time we started the show, and it's not a great start, by the way, to this Monday morning. Nifty is only trading in the green owing to one stock, that's Infosys. So you're still seeing some meager gains, but it is the broader markets I think one should focus on, where selling pressure continues. Mid-cap, small-cap, both of them are seeing sharper cuts. Bank Nifty is also down, and you are seeing losses coming in for the PSU banking stocks. The Nifty PSU banking index is your top sectoral loser right now. That's down about 2% in trade, and metals is also seeing some cuts of about 1%. Let me quickly highlight a couple of F&O stocks which are moving around. We've addressed Infosys, but Dish TV is also the one which is up about 4%. Piramal Enterprises is having a good day. That's up about 3.5%. Apollo Hospitals, Yes Bank, Sun Pharma on back of upgrade coming in. That's also seeing gains of about 3%. And Tata Motors is up about 1% in trade. Whereas on the losing side, you've got DHFL we've addressed, but look at Birlasoft, that continues to slide lower, down 5%. Tata Elxsi is trading weak, that's down about 3.5%. And banking counters, Union Bank, RBL, Bank of India, you name it, and all of them are seeing cuts of about between 3 to 4%. And also Arvind continues to slide lower today as well. That stock's seen correction of about 3% in trade account.
All right, well, there you have it. On that note, I'm going to take a moment to thank both our experts, Amit and Amar, for joining us and taking us through their views on the markets. For more updates on the F&O space, you can also check our website out, BloombergQueen.com, specifically the futures and options pages.
Well, with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching, but stay tuned to Bloomberg Quint for more news and updates.